Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout this show. Well, the stock market traded in a narrow range last week as fears of the spreading coronavirus was counteracted by good earnings reports. But that is really until Friday. Monday, the U.S. markets were closed for Martin Luther King Day, and there was some news out that Libyan forces had shut down an oil pipeline, and that had oil popping to the upside. And Tuesday, markets turned weak overnight on the first report of 300 cases of this strange virus in China, and that there had been one death. Stocks rebounded, but oil retreated as it was apparent that Libyan oil shutdown was temporary. And then later in the week, middle of the week actually, oil started to move down very sharply as news of the virus spreading was a threat of slowing down of the economy. And the IEA came out and said there is a glut of oil and it's going to be worse, and expect maybe 1 million barrels a day to be in a glut. And oil had a bad week. Wednesday, the news came out that the coronavirus was contained, and that proved to be just a false, fake piece of news that came out, because we all know now it was much worse. Early gains in the market on that day came from IBM and Tesla, that has now had upgrades to stratospheric levels. I'll talk more about that. And that lifted stocks on Wednesday, and that again was until more news came out about the coronavirus, which said that there were more deaths and that the virus was spreading. Thursday, China markets overnight were down about 2.5% as the third city got quarantined, and now I believe there are 7 cities quarantined, with about 35 million people in China not able to move out of their cities. And the U.S. markets on Thursday went down and then rebounded all day and had follow through right into the close on Thursday. Friday, they were continuing up in the morning. They got a boost from Intel earnings, and the NASDAQ moved up, and that was until news came out of the second U.S. case of the coronavirus, a Chicago woman who had been in China just about a month ago. And there's also news now of a third case coming out here in the U.S., and they are monitoring 63 other cases right now. Well, that news finally was too much for the market to be able to withstand at a time when it was so overbought anyway. And we have this virus now spreading into as many as 10 countries. Impeachment trial in the Senate proved nothing but a mild distraction as senators exercised their vocal cords, and their vocal cords maybe should be exorcised. With the typical party line vote expected, there's no way to get 67 senators to remove President Trump. The big question is, will the voters do that? Will they do what the Democrats in Congress could not? The way the polls are shaping up is kind of what we expected and we thought would scare the markets now as Sanders moves up in the polls, and the youth certainly wants to get behind him. And the issue now, the president says he's going to do something about entitlements. All of a sudden he wants to do something about the budget. Give me a break. That's not going to happen. But he talks entitlements. It gives weapons to Sanders. The youth of America is going to go after that in a big way. And we might end up with what now is kind of a social democracy into a full-fledged social democracy if we end up with a President Sanders. Possibility. And who knows? We're just going to have to wait to see where this all goes. This all is playing along with the analysis that we had, which showed an early high for the stock market in 2020. Even though we think that after a correction you could get up near there or test those highs later on in the year, we have moved into a period of risk. The market has ignored Mideast conflict and impeachment and epidemic. It's been super strong. But of course, the question is, can it ignore a pandemic, which it seems to be having trouble with right now? I think it won't ignore later on in the year the prospects of a socialist president. And yeah, that might actually be worse than Mideast conflicts or impeachment, or maybe not, how bad this pandemic ends up. But this is a time now we're getting into when the markets seem to be susceptible. We saw them stalling a little bit and now starting to move down. We think the next 1 to 2 weeks is a pretty key time. The market made our upside projections in time and price. So that is what we expected, really. It got up to levels we expected, stalling at times we expected. And now we think volatility was about to explode. We showed that in the VIX charts over the last several weeks, that we were entering into the period mid-January and getting into February, March, where we could get much higher implied volatilities, and now it looks like that could be beginning right now. Also, on Thursday, we did a stock sectors video. This is for level 2, 3, and 4 members. You can access our 500 videos that we have on all aspects of engaging in the markets. And the one we did on Thursday was about 20 stocks that were stretched and ready to correct. And we gave you that list of stocks, and I think a lot of them are falling today, actually. We're calling for this to be kind of the first leg of a correction right now, and for this one to give you like 100 to 175 points on the downside in the S&P 500 from its peak to around March 1st. It could be worse than that. And again, we think it's just the beginning of a correction and the beginning of a long top that is being formed in here. Yes, we think the best levels have been seen for the stock market this year. For the week, fractional losses right now around midday for the market, and we have the bond market and the dollar markets getting safety bids coming in. On the Asian weakness, bonds are getting bid up around the world, and that yields, of course, falling. And that Asian weakness from the coronavirus has the 30-year bond up about 2 points, about a 10 basis point drop in the 10-year yields. Gold was chopping around unchanged and has now began to get a lift, so it's got modest gains for the week. We think it's the beginning of a next attempt over 1,600 or around that level. The dollar up about 0.2 for the week in a safety bid, and oil really plunged. I mean, it had a high over 60 on that Libya news and then fell to 54.77. It's now down about 5.5% on the week, and the big news there that IEA saying that there is a glut and a lot of oil swimming out there looking for a home that won't get used. And if we get a worldwide recession based on this horrible news of this coronavirus, that's going to knock a lot of commodities down. It's going to be hard to get upside moves in anything, and I think the stock market would be more susceptible to decline earlier than we had forecast. Follow us on Twitter at askSlim. Please do become a YouTube subscriber. We are putting things out now often. RV now is stepping in and doing some videos also, and he's really exceptionally good. He's my protege in cycle analysis and spectacularly good at it, and he's really developing now to be doing some of the videos that I have done, and he does these little blips of single analysis on individual stocks, and I think that you will find that to be extremely interesting. So do become a YouTube subscriber, and of course you can watch Market Week on YouTube also, as well as on our site and on many partner sites also. All right, so that is the opening. We're going to switch now, and we're going to look at what is the best and worst stocks for the week. What we do is we look at the cycle analysis. And if you like our cycle analysis and you like the style of things that we do and you want to see the immense amount of content that we put out, 500 videos and our just incredibly good stock index report live stream for level 2, 3, and 4 members. If you're an index trader, I mean, I don't know how you operate without that. And you can also get our Slimulator in level 3 and our charts live on your Thinkorswim platform in level 4. And the level 1 information that's coming out will be the unbelievable Slimulator momentum tracker for investors. We are just ready to launch the beta testing in there. Again, for version 2 of beta testing, had a lot of fixes and really stepped it up. You'll love it if you're an investor. Pretty soon you'll be able to beta test with us for free. All you have to do is become a free member. Go to askSlim.com and then go to the membership page or scroll down on the front page and you'll see our memberships. If you've never tried our memberships and you want to try a premium, please do write Matt, M-A-T-T, at askSlim.com and request any level of a trial membership. He'll be glad to send that to you. And once you sign up, if you want to walk through, he'll do that also. He'll spend 15 minutes with you and show you around the site and how to use all the content. Just a great offer. Matt is great at that. Man, does he know this stuff also. So we have an unbelievable team, and you can benefit from that by becoming an askSlim member. Okay, so now let's switch over. We're going to look at Intel, INTC. This stock gets a pretty good lift, about 13% now on the week. This is the highest price we've seen since around 2000 in this stock as it explodes to the upside on good earnings and super strong guidance. Analysts all over it lifting it up. It hits that target zone. Those arrows over there were put in there when the stock hadn't gotten anywhere near it. We put it in there because you weren't seeing that part of the chart. It wasn't that high. So we want to put those in there so people know to look up at the target zone. And there it goes, gets into it right now. We're kind of looking for the stock to get to around 70 if the market lets it do it, and then have a pullback. There's a buy zone in there, probably under 65 or right around 65 bucks. And I think that would give you an opportunity to move up pretty significantly. Good earnings, good guidance, and the stock is in good shape. Tesla has been absolutely mad as it's been exploding to the upside. And of course, we've had to upgrade our analysis time and again as it continues to move up. It moved up well through that fib extension target zone we had there, and now up into these other targets up there and through everything basically. And then you see it rejected in here. Got that decline. The stock has been upgraded again and again. There's upgrades to 600, 620, 800, and somebody actually came out and gave it a potential $1 trillion value. This is some brain trust out there that sees the stock going to 6,000, and that's a brain trust. I wonder if it's a brain dead trust. Anyway, this stock, we look for a pullback into this area close to 500, under this 533, down potentially to about 500, and then moving up again. We think that would be a buy zone as we have it labeled there. The next stock we're going to look at is JetBlue, JBLU, and you can see right there that it has been moving up nicely. Now, this stock is when you see news like this virus out there and the potential for travel being shut down, well, that's really bad for airline stocks. And airline stocks mostly did not do well. However, JetBlue did really well. It had a small beat on earnings, but a small beat gave it a big lift. And this is a bullish scenario that we have in here. You'll notice the cycles, higher high, higher high, higher high. You're going to get a higher bottom in here. That's your buy zone under 20, and we think it'll be there in the next month. You will note that there are a lot of lows projected out into March, late February or into March. That's the market conditions that we see also. So you get that synchronicity between the market and these charts. and then I get more confident about my overall market projections that I see in here. So JetBlue really good, had a big up week around 6.5–7%, and now we see it is likely to give you some correction in there. But then moving up again. Home builders had a good week, like 5–6%. As the market started to look at these declining interest rates, which I think are temporary, and then started to bid up the stocks. Now you can see in here, this is an example, a great example of cycle analysis. These are cycle brackets. They are the way that we just have guides. We put guides in there as to the repeating lows. The low to low, the length of the cycle, is what we're looking for to be able to get the proper information on multiple time frames. In this case, you can see a beautiful upward trend going on as it moves up this 13-week moving average and continuing to move up. You see those two blue arrows right there? The reason that they're there is to tell you, look higher on the chart, because there's our target up there, around 47 and a fraction to hit that fib target zone. Again, if travel gets shut down, if the economies get shut down based on the coronavirus, then nothing is going to do very well, and we won't hit these targets. But if things are relatively calm and this gets contained, and interest rates stay relatively low as they are, then the home builders, I think, will continue to do well. So Pulte Home up about 5% on the week. Also had good gains out of Lennar, D.R. Horton, and Beazer. All of them early in rises, as you can see in here, this in the fourth week of this cycle, moving up right here, 4 weeks. And you can see in all of these cycles, they don't peak in 4 weeks. So you can see that there is likely going to be more coming on the upside in this group. Now, one of the groups that we talked about that was stretched, overbought, likely to give ground was the money managers, the stocks like Apollo or KKR or Blackstone. I'm going to show you Blackstone in here. As Blackstone moves up about 4% on the week, Morgan Stanley upgrades the stock, and you can see the multiple time frames in here and the minor and dominant patterns that we're looking at. Right now it's in we believe, a minor correction. We're going to look for a pullback in here to that 13-week moving average, right around there at about under $57. That would be about a $5 decline and very tradable, and then a move potentially up again after that. So you'd be threading a needle in here, but we think this decline is coming in here because it is super stretched. Remember, we gave 20 stocks that were set up for pullbacks, and you should watch that video. I think it's really good. That is a look at the best stocks for the week, and now we're going to switch over to the worst stocks for the week. Alcoa is the one we're going to start in. As you can see, this stock continues, and this has our colored phasing in there. So you can see the green phases, the early part or rising part of the cycles, the yellow, the corrective, and when it breaks under key lows, it's a red area. It did that over here, and it's also doing that right now. We were projecting that a base was being formed in here and that the stock was buyable once this decline was over with. It violated that. It violated the key low, and so now what we do is we put a note to our subscribers that the base was not established, and our projection is now lower because it broke that level. This is what's called analytical flexibility. I don't care if it's bullish or bearish. All I care is that I get the highest probability out of reading what's in these patterns, and this pattern now has broken down, and that means it needs months of work before it could potentially turn into a bullish stock. So Alcoa looks really bad. 12% down on the week. This is the second week it declined after a bigger loss than expected, and we have lowered our projections, as you could see. In the materials sector, U.S. Steel, a very similar situation, also breaking to a lower low, under $10, and that's a 10% loss on the week. Now, stocks in this category basically look like, as you see here, that there is potentially a bottom going to form in the next few weeks based on these patterns. And you can see our upward projection, even though it's been lowered. We have the same thing going on in FCX, Freeport. That was down 8% on the week. We think it's got 2 or 3 more weeks before it bottoms. Rio Tinto and BHP Billiton, those stocks also a couple more weeks before I think that they get in position to have some good upside gains also. So the materials getting hit by the potential slowing world economy, and that we think is a final phase going on that will take you through this stock market correction that we believe is just starting to begin. When gets this break? You can see right there. This is actually a kicker pattern. That's called right there, where it gaps down and then continues to move down. And this kicker pattern says that it's going to continue to decline for about another 3 or 4 weeks. Now, the Chinese government is considering shutting down the casinos in Macau, because they want to do everything they can, and rightfully so, to stop this coronavirus. So our pattern suggests in here that it's going to decline into a buy zone in here, and maybe as low as 122 over these next several weeks. Las Vegas Sands down 7% in the week, a very similar situation for LVS. Now, Apache is a stock that just moved up very sharply when there was some news of an oil discovery, and we were skeptical as it came up and hit those resistance zones and then began to move down after that. We thought that it would stop here and then get a pullback. Now, it's probably time for it to start to move up again, and the stock really to us looks like it's at a point on the daily chart where it's significant. Now I'm going to switch over to the daily chart. I normally don't do that in here, but I want to give you a little sense of the multiple time frames that we look at right in here. So you can see in here that as I look at the weekly chart on the left and the daily chart on the right, there are cycle patterns in both. This is now pulling back to the upper support zone right over here at a time when this pattern should be bottoming. That says that the stock is likely to move up again. And investors love this, and you see this upside gap in here. I don't think it's closing that gap. I think it's going to move up again and get up into these levels and test the highs here on the weekly. So APA, this stock moves down 10% on the week after that oil find, and we think that it is in very good shape when I look at that. In the rest of the oil category, because of all this news of this big supply in oil and the slowdown scare, Oxy moves down about 9%. It failed at resistance. Schlumberger moves down 8%. That, as well as Hess, down about 8%, looks like they have declines coming out into March. So those are very much in alignment with what we see in the rest of the market. Now, we talked about United Airlines, and let's go back and look at that right now as we talked about the airline, and look at United. It broke through the support zone right there and is now breaking through this key level right over here. This is not good. And again, you can see United, American, and Delta. They're all represented on these cycle brackets, where there's another nested low based out in this area in March, beginning of April. So this decline is likely to continue in a big way. And the next real support is down around 77 for United Airlines, and it really looks like it's going there. And you got to hope, if you're a bull, that it holds there, because if not, it's going to be a very significant breakdown of the range it's traded in for well over a year, between 77 and 97. So that would be a very negative occurrence. It's already a negative occurrence that it's gotten down here below these levels or back to them at around $80. Again, watch 77. That's a pretty key number. As the coronavirus situation and the potential for shutting down airline traffic between these countries is a very significant issue. As we move to the last stock in the last group, we're going to look at DFS, which is Discover Financial Services. This is the credit card also. Boy, MasterCard and Visa, which are more in the transaction business, they're holding up like crazy. And those are a couple stocks that you're going to want to see our analysis on that we showed in the Thursday video. Now, what I'm showing you in here is this big head and shoulders forming. in Discover Financial. They beat by 1 cent, but their sales missed. Analysts are downgrading this stock. And this really is big trouble for a stock like this. If you look at Capital One Financial, you'll see that big shooting star, and that looks like it topped. American Express is actually up a little bit for the week on good earnings, but that looks like an exhaustion gap. So this sector looks like it's got problems now. If some of them have been good, but they're topping, and this one is terrible and breaking. Now, if it gets below that neckline, the projection will take it down to about 58, right down over here. There is intermediate support, or major support, sorry, at 62 and at around 69. So this first wave to the downside that we're in, that breaks the head and shoulders, probably gets you down here to close to about 69 on that move. Discover, I would sell it if I own this stock. This really is a stock that is looking like a lot of trouble. You can see as you look at the momentum situation, it's turned down right over here and likely to continue on the downside. So Discover not in good shape at all. That is a look at the worst stocks for the week. Just amazing market that we see going on right now. And as I'm recording right now, the stock market has taken another dump as it was down about, S&P futures were down about 25 points when I started recording, and they're now down 36 at this moment as a panicky situation begins to set in. It's hard for me to believe that they could get a rally here on Friday in the last hour or couple hours, unless they're rebounding from a very depressed level, as the fears of what news will come out regarding the coronavirus or what the real situation is really is weighing on the market right now. And when you get a market as overdone as this market is, and something like this comes out, well, the risks are extraordinarily high, and that's why you have a market that is really dumping to the downside as it is right now. All right, we're going to get to the short-term view for the coming week of 5 major markets. We'll look at light crude, the gold market, the dollar, bond market, and the stock market. The one things we were wrong in this week were the dollar index was stronger. It broke out of the range on the upside, and the bond market was stronger. Both of those are safety bids coming in to the markets as this news of the virus spreading has a panicky situation setting in, and money is moving out of risk and into safety areas, and the dollar is considered that, at least for now. So that had us upgrading our projections and ranges on the dollar and the bond market. The stock market, we were pretty right. The only difference is that we thought it would go down and then come back up for one more time, and it looks like the rally that we expected was cut very short very quickly and won't, and is topped already versus topping next week. So that's pretty close. So we're going to get about a 70% on the week as we got light crude right, the gold market correct. So that's a pretty good week that we're having here now. So let's switch over as we leave the Discover chart and we move over to light crude. Again, our members get to see our all of our analysis on the weekly, as you can see right over here, which has been pointing to the downside. The daily, as you can see over here, which I'm going to focus on. And of course, we look at intraday also. And the intraday is pretty significant because when I show you the stock market, for the first time in several weeks, the intraday momentum has been lost in the stock market as it moves down very significantly. All right, so here's light crude. We're going to look for the next 1 to 3 weeks is what we're really projecting, and that looks to us like it's got about a few more days to the downside and then getting an attempted rally. And this is a sell zone right in here over the 56 area, maybe as high here as into the 58s. But if we get a bounce in here, we think it's going to be temporary and then move down again. And this is a shorting time frame right over here if that happens. Some of the evidence is that we have another month of downside risk. It all points to selling bounces. You could see negative momentum in here. There's negative momentum in the other time frames. And all of the evidence says to us that bounces will be short-lived and that the energy market will be moving to the downside again. You saw the collapse in natural gas, and now the products are getting hit pretty hard. So this is a very, very weak situation that we're looking at in the light crude market. The gold market, we thought it would be moving up again. We were a little suspicious that we were making a little flag in here that might give it one more little move to the downside, especially with silver looking weaker, but silver popped in a big way today, and gold is popping also down up right now about $7 on the day, and likely that we're going to see some move towards the 1600. We see upside momentum. It has remained. We got a buy signal on the projection oscillator right here, a buy or add if you're still long, or a confirmation of the upward momentum. It's all three of those when you use the combination of the projection oscillator and the slim ribbon. The best combination I know for understanding momentum, and you can see as it begins to move up again, we're going to look for a test of this area, somewhere between 1600 and 1613 in the next couple of weeks. Some of the evidence continues to show intermediate patterns that are exceptionally strong, and the potential for some shorter term patterns that will bring you some corrections down the road. But again, for the near term, we're going to be looking for 1600. This really confirms the uptrend moving up again in here, and a powerful potential situation for the gold market. Now, if we get into an inflationary situation based on what's going on, the gold market and the silver market, they won't survive that. None of the metals will. We'll get some upward tick as we get some movement into safety type instruments like the gold market. But if the dollar starts to spike based on it, the gold market and the metals markets will not survive that. And I've been around long enough to see whiffs of deflationary markets that the gold looks good and then all of a sudden it stops. So while we're pointing for this move up here towards the 1600, we don't expect a lot more right now, and we're cautioning that if things start to really fall apart, that gold will not do well under those conditions. So that's a look at the gold market. We're going to switch over and look at the dollar. So the dollar, as I said, we have upgraded our projections in there based on the formation that we have in here. So we had a support zone right over here. We thought it would be coming down to that support zone, but these couple of days are really money moving in from other countries, and that's despite the fact that interest rates are going down. So you have bonds moving up and the dollar moving up at the same time. That's somewhat anomalous, and that happens only when the bids come in because people are afraid of something. So that's where we are right now. We're going to look for the dollar to have some little bit of a pullback in here, but then move up again. There is a possibility that this resistance way up over here at about 98.40, that would get tested. In other words, if it chopped around in here and things got really panicky, the dollar could spike up to that area. That wouldn't do a whole lot on the longer term conditions of the dollar. However, it would make sense based on what I'm seeing overall in the markets in here. We're going to look for just a little bit of a correction and then moving up again with a potential for 840. This is an upgrade that we're doing in here on the safety bid, as a very strong condition exists in the dollar based on what we see on overall in the other markets. Some of the evidence is that, well, it needs more clarity. It's improving in here, and if it's based on some kind of news like we have with the virus, well then if things get contained, the dollar will get hit very hard again after that. If the panic bid remains, well, it could get higher than we are right now. So it's a little hard to give you some of the evidence now with that influence in there of the virus out there that can make a big difference. We're going to look at the bond market now, which is a similar story, moving up where we thought it was going to be moving down. So you're getting this upward spike. Our thought was that it would be moving down and that it would be headed down towards the 55 level for the 30-year, 155. Well, that's clearly changed in here. Again, as the safety bid comes in, money moving out of risk into safety. And this is where the resistance now is from the weekly chart. So while we were looking for it to come down into this area, that could still happen, but it's going to happen from higher levels. So again, we had to upgrade it based on what we see in the markets. So now our upward potential projection is for several more days in here that it could go up and then correct. The support zones in here are rising as this rises. So we're going to be continually upgrading the downside projections. Right now it's somewhere near around 158, upgraded from the area of 155. The higher this gets, the higher we have to upgrade these the support zones, because time passes and the amount of normal correction would take it to higher levels. So the some of the evidence in here as we look at the bond market is that the safety bid is in here, the intermediate resistances are here, which it's likely to get to. And again, we need to factor in the panic situation that is entering into the markets here on Friday when we look at things like this. So I can't be talking short-term bearish as I was, and for interest rates to begin to move up again until this clears, until this stuff clears that's extraneous, that's horrible, that's going on in the world and affecting these markets. So we have to be cognizant of things like that. We're going to look for the bond market to try the upside still, maybe getting up to this level up over here about 61.06, or even to the top level over here around 62.14, and then from that point probably falling of its own weight if it gets up to those levels, or interest rates get that low at that point. Into the probably on the 10 years they'll be around 1.5 or 1.55. So this situation in the bond market, you could see reflective of a changing situation where the momentum is now changing to positive. That's going to give you a situation where it's going to be hard to get significant declines in here because money wants to go where it's safe. So that is a look at the bond market. The stock market is turning south right now in a very big way. The S&Ps right now, as I speak, the cash market down about 35, and you can see it is turning down. Now, the expectation was that it would turn down at this time. We thought it would get down a little bit, rally, hold up for another couple days, but you can see what's going on because of the fear factor that's hitting here. It's getting into the upper support zone, but I got to tell you, we're moving past this intermediate low period where you got the little rally that we had right here and now turning down again. That scenario is bad. Now, we have still very strong momentum that we had in here, but that could change. And the intraday momentum that we've had for weeks and weeks that's been powerful and giving buy after buy signal has now turned neutral and very ready to turn negative. So that's a situation that is suggestive of lower prices and a panicky situation here potentially in the market. Our downward projections were for the S&Ps to lose from their high from 100 to 175 points. That would take it down to 32, 30-ish. Right, this level right over here is 32.60. This level right over here, this is the lower support on the short term, is 32.40. Then you start to get into the intermediate supports here, and I put them in because of the situation that the market's in. This could certainly be a situation where the free fall takes you down to these levels. This level right over here is at around between 32.23 and are 32.12, and then this one right over here is around 31.50. So these are all potential. Remember, we thought they would fall into the February time frame, then get a rally, and then fall hard again. So all of these numbers, when we get out to the projected low, normally I want to talk 1 to 3 weeks, but this cycle low, as I projected out there time-wise, points out to March 6th. So the decline we're starting right now could go out into the first week of March very easily, and that's in alignment with the intermediate patterns. By the first week of March, S&Ps could be down the 175 or more that we're looking at in here as a potential. This is a very weak situation that is setting up first on the intermediates. On the intraday charts. Charts move in a domino effect. When things start to deteriorate, they do, or when they start to get better from a decline, they start in the intraday, and then all of a sudden it appears in the daily, and then it moves into the weekly. Right now, the intraday has lost its upward momentum. The daily has not, but you could see what's going on in this engulfing right over here, that this really is a situation that speaks to the potential for some real trouble in here as this cycle peaks already. So if this cycle peaks right over here on this February 7th, it declines out here, this date right over here on January 24th, it then declines out to February 7th, it rallies at some point and then declines out to March 6th. Well, that gives you the stair-step ABC pattern on the downside I'm laying out right here, as the potential is for sharply lower prices. So this is just starting. The market is very susceptible to this. I'm going to show you more because of what's going on in the market than I normally show. You could see this weekly pattern reversing in here, and this point out to the first week of March for the intermediate low at around 31.50 right over there is what it points to. And we talked about the VIX getting into this time frame where it was likely to start moving to the upside, and you could see it happening right over here as the VIX is now up 2.5 points on the day, and just entering into this period, this favorable period on the VIX right over there. And on the daily chart, man, it's starting early in here, earlier than we expected, as we thought it would last a little bit longer. Maybe this calms down a little bit, but then when we get over here into February, that's a period for higher VIX also. So it's starting earlier than we expected in here, and we're getting into a time period of much higher volatilities, and that's what we looked for all along. So there's your VIX on the daily, really popping up a little earlier than we expected that to happen. That is a look at all of the information that we're going to share with you today. We have a ton more that we're going to be bringing you all week long. We're going to be, of course, watching this situation. We're going to be updating our charts. We're going to keep bringing you the most favorable things to look at so that you can apply your own analysis to ours, and really learn a ton about how to improve your entries and raise your odds of success. I hope you found this to be an extremely informative and valuable show as we looked at this, and that you learned something and you'll be able to convert that into either making some money or certainly saving some money as the market conditions start to get pretty extreme, as we see that right now. My heart goes out to anybody who's already suffering with this virus, and for those people that are fearful, I'm sure that the CDC, and you can see how quickly China is acting to do everything they can to stop it. So that's it. I want you to be so careful. It is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to the city and I'm going to do a steady show.